The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
All right, looking good, Billy Ray, feeling good, Lewis. Well, I guess there was something going on in the news yesterday. I reported that in here that there was going to be a vote in Britain, and I certainly had that spot on right. Unfortunately, it wasn't what everybody thought it was going to be. I mean, when the bookies start telling you it's going to be 4-1, and they start raising the odds to 90% just to get people to take the other side of it, wow. And then when the margin folks start doubling and quadrupling the margins, do you think they're trying to tell you that something's going to happen? The first chart that I posted in here is the German bond. As you can see what happened. I post this in here because if you would have had a stop loss in this, it would have gone about $6,000 beyond your stop loss if you'd used the old high. So I just wanted to tell you how crazy it was. Rich Anderson will be on at the break. Rich, like myself, has been up all night, so just keep what's going on. What I wanted to walk through, what I was looking at, these are things that we talked about yesterday. If you remember, one of the charts that we looked at was the that's what happens when you don't get any sleep. Was the German pound. Yeah, it was the German pound, right? No, it was at the British pound. The British pound. We had two targets. The first one is at the 127 at 150, and the second one was at the 1.618 at 152.50. And what happened was the market went and did exactly what we had expected it to do. It stopped exactly at the first price objective. And this was, I'm going to try to explain to you what was happening with the market because it was an outlier event. I mean, the spreads went nuts. It was over 100-point spread in the pound when it's usually 2 pips. It was 100 pips. So just to get in, you had to pay $700. So that's the craziness that went on. But look what happened when the pound was making 150, folks. This is what was interesting. This was around 11 o'clock. I believe it was around 10 or 11 o'clock last night. I don't even remember the time. It's got too bad. But you'll see that we made a beautiful 3 drive on the 15-minute chart, and it stayed there for a little bit. And I got ready to send this out because it looked like a low-risk trade. And by the time I got the video made, the market had already broken 700 pips. So by then there's nothing you can really do with it. So this is some type of an outlier event. I don't think there's any question about that, but we've had some monster moves here, and they are probably going to. We've said all along that there's going to be a lot of stuff coming in from things. We got Brent from Martinez, California. Hello, my friend. How are you?
Good morning, Larry. How are you? How you feeling this morning?
Well, it's not a morning. It's still a day from yesterday. There's no morning here. What can I do for you, my friend?
I was really just calling to talk about how just beautifully the patterns set up during that whole. Really, you just had to watch the patterns. I guess is what my point is. The news is not even that important. If you just watch the patterns develop, they were just beautiful. And in particular, I happened to be watching the Qs because I went short the market at the close because as they ran the thing up to me, so often it's conventional wisdom is completely wrong, and of course it was. But I was watching, they brought that up to 44.94 at the peak, and then it dropped, proceeded to drop down to I think about 43.41. It's like a 153-point drop. And then it made a 50% retracement, and you could see it was going to play out. It would go down to, I already projected about 42.64. It did a little expansion of that, but in general, the patterns were just awesome, and I didn't even look at a lot of them. I know gold was the same. I'm not sure across the board they're like that.
Well, they were. If anybody doesn't believe in Fibonacci, I challenge them to go and look at the markets last night, and you'll see that spot on every market hit a perfect fib point. I posted in to Tiger TV the E-mini, and as you can see, the low last night, even though it was limit down for about 2 or 3 minutes at 1999, that was an exact 382 of that whole move from February 8th. But with that long bar, that usually the significance that we're getting ready to go a little bit lower. But you're right, the patterns were certainly there, and those are the kind that you really like to see. The one that I thought was really good was that gold, because we were looking for the gold to have a pretty good move, coming off of the 1255 level, and it hit 1250, 250, and then rallied $106 an ounce, which is that's a huge move in anybody's language. So it's going to be interesting what happens. Not only that, Brent, but since gold hit that 1262 last night, it's also had moves of over $120 just in swings intraday. $10 and $15 swings intraday. It's just really amazing, the swings that we're seeing here last night and also this morning.
Oh, it's epic. It's just great to see. And again, the patterns kind of tell you the story. I just wanted to personally thank you for all your help. It's been a really good year. I'm up over 100% in both my accounts, and I attribute a lot of that to you. I know everybody has to make their own trades and, obviously do the work themselves, but it certainly helped to have, you give me that good foundation to start with, and I can't thank you enough. So just have a great day. It was great
all right, my
talking
friend.
to you, and I'll talk to you soon.
Okay, thanks a lot,
your
Brent.
family too, Larry. All right.
I will. You bet. Okay, folks, let's take a look. I wanted to show you what happened because it wasn't in the British pound. Let me explain to you, because I do trade a lot of foreign exchange here. You'll look at the British pound. You see when we made that 150 area, this was at, there it is, at 1900 hours. What the heck that would have been? That would have been 7 o'clock at night our time. That's what it was. It was 7 o'clock. And that's at that time when the pound broke 148, that's when the bid spreads went totally wacko. I mean, it was 100 pips either way to get in the market. After we broke from 150 all the way down to 143. From 143, we rallied all the way up to 147. Then we came down, as you can see. We made a perfect A, B, C, D pattern at the 140 level. Then we rallied up to almost a perfect 61% retracement at 147. And then from 147, it started down. It was tradable during this time. The pip spreads were 30 points or so, but it was tradable at that time if you were awake. The problem was many of the brokerage firms weren't even taking orders. I got several emails from the folks that listen to us here saying that they could not get into their systems, and that was because they shut you out. They wanted to protect you. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I'm going to get into big time trouble here, but I know I have to ride in the old, not the old, I have to take that boat ride, the yacht. Wow. This is terrible. I made a bet with Tom O'Brien bonds would never see 170, and they're above the 170 level based on the old contract too. So I do have to take another ride in the in Tom's yacht. I took one about 4 years ago. We went out in a full moon on the inland there. And we had about a 4-hour ride. Well, it was actually about 10 minutes, but believe me, we were in the inland waterway, and the waves were coming about 6 or 7 feet over the hull. What's the front of the boat called? The front? What's it called? The bow. Anyway, I just don't like boats, but I'll probably do it again. Folks, there's another Brexit going on in the world that people are not paying attention to. This is an old-timer talking here. But Larry Williams, my good friend and old-time trader, has also put out a special report on bonds. I'm looking at the special report on bonds myself that I've talked about. This is the biggest scam that we've ever been focused on, folks. They're doing the same thing in the bond market that they did to Britain in the Brexits. They're telling you one thing, and it's not the same thing, and it's almost over. I don't know when it's going to be, but we're very, very close. Remember Bernard Baruch's book, and Bernard Baruch was one of the smartest investors that ever lived. He was a personal friend of J.P. Morgan. They asked him to be the Secretary of the Treasury several times. He wouldn't do it. But his famous quote is, "Don't be concerned on the return on your money. Be concerned on the return of your money." And this is the scam that they're putting you through right now. You look at these negative rates that we have in countries like Italy, Ireland, Portugal. I mean, this is absolutely ridiculous. And when you see volatility like this coming in at this levels that we are, this is ideal, to position yourself to go the opposite way. So I am getting ready. Well, I already short the bonds. The bonds last night had a $6,000 swing. I mean, you remember the low we looked at yesterday at 166 in the bonds? They made 165.29 and rallied $7,000, boys and girls. So let me tell you something, folks. This thing is really, really getting ready for a big time move. And I don't want to get too excited about this, but something big is happening. And this is not where the real action is. The real action is going to be in this interest rate market, and they're going to hurt a lot of people, and I ain't going to be one of them. So I might lose on this puppy, but I got to do it. It's Friday. I probably should wait until Monday, but I'm going to go ahead and take a look at it, because this is what you're supposed to do when all the patterns are lining up and you got the news in your favor, to put this stuff on. So we'll look at it. So anyway, that's what I'm saying. I know you don't need to hear it, but it's just patterns. It has nothing to do with the fundamentals. I'm just looking at what the patterns are. Today, the Dow Jones Utilities should make new highs, about 8 or 10 points higher if they go much higher than that. But watch that, because if the utilities do not go crazy day to the upside, this is another thing to tell us that we're getting ready, for something really big to happen. And that's going to be the big surprise. You saw what happened to Brexit when people were surprised. And you remember last week I said my friends from England said it was going to be an exit vote. And they stuck by that. I mean, even though the polls changed back and forth, they stuck with it, and they made very, very handsome returns last night. Now, the numbers on the Fibonacci sequence, if you don't believe in them, folks, just go look at crude oil. The high in crude yesterday was an exact 786 of the previous high. The low during that total crisis that was going down at 46.98 was an exact 786 off the previous low. The German DAX, I posted it into the room here. It opened at a 78% retracement of the low 3.5 weeks ago and a 1.27 expansion of the last 4 or 5 days. You can't make these numbers up. They don't work all the time, but when they do work, you have to pay pretty good attention to them. In the Treasury bonds, we got up to almost 174 during that debacle between 166 and 174. Then we broke down 3 handles, $3,000. We rallied up to exactly a 61% retracement at 172.10, and now we backed off another 1.5 from that level. So bonds have had a $7,000 swing today, along with other things. But this is going to be an outlier event that people are going to go back and look at and say, well, something really significant happened. And basically what London is doing is, or UK, is they're exerting their independence, and they want to have control about who comes into their country, and which they should have. And but that's neither here nor there. And I'm into my soapbox, and I'm finished. We're going to have Rich Anderson on in just a little bit, and then we'll see what really happens here, and we'll go from that level. Okay, let's take a look. I already did the E-mini and showed you where it stopped. The limit down today, I still believe, is 19.99, but they change those rules all the time, so you can't always believe them. You really can't. So. One thing, the corn trade. Yeah, once we went below that area at, I can't even remember the prices. Anyway, we're setting spot on a 78% retracement in the corn now at 383 level. The soybean move, if you recall, we were looking for another 40 cents lower in the soybeans, and we will take a look at those. You'll see here that we're also at a 61% retracement down here at the 10.79 a bushel in the soybeans. So all of that is, starting to line up pretty good. But folks, let me tell you something, and this is comes from my hand, from God's ears to your lips, or something like that, whatever it means. These things are not for the faint of heart. These brokerage firms are trying to protect you. They're not trying to keep you from doing something. They're just trying to protect you. Just to give you an example, here's the pound yen last night, just to show you how crazy it was. The pound yen had a $20,000 move in about an hour. And believe me, there was a lot of illiquidity hit that market. So you can't be in some of those things, because it's just too crazy to do it. So that's pretty much what I'm talking about today. Who knows? All right. Regarding Larry Williams's, he wrote a really good special report that's $35 if you want it. You go to www.ireallytrade.com. and he puts his stuff in there and shows you what it is. I wanted to show you his projection for Treasury bonds here. Oh, I can't put that in there. He might get mad at me for that. No, he won't. I know him too well. I've known him for 50 some years. This is his projection that he's had. His cycle projection is supposed to be topping here in the bonds, and we're heading down into September the 21st, so we'll get a pretty good example of that. This volatility that we're talking about, this is not new to us, folks. Norm Winsky has alerted this to us before. Bill Meridian came on and alerted it to us before. Bill Foster, who we've had on the show before, he had a special report on the Brexit that, they were going to leave based on astrology, and that worked. 877-927-6648. Wow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, I think we got the master of disguise. Rich Anderson, are you there?
Yeah, I'm here for a few minutes here. It's gotten a little crazy today. This is the, by the way, this is the biggest surprise since Truman beat Dewey. I mean,
I don't know. Golden State getting beat by Cleveland was pretty tough too, you know.
that's true. But you know how they did it? A week ago Friday, the big boys put a 25,000-pound bet on the stay vote. You know, the talking heads promoted it and how the bookies odds in London had changed to stay, and it was 80% 20. Got the market to rally, gave them all they wanted. Isn't it a beautiful thing?
Yeah,
It's a black swan event, and they don't have a plan B. This is the amazing part. And the people that are going to have to negotiate with the EU aren't in power yet because Cameron's resigned, and it'll be 3 months before you have October before you have an election. And imagine what this does to the Spanish election over the weekend, and now Scotland's going to want to have another referendum. Very interesting times we live in.
This is for sure. Did you notice last night, Rich, some of the wide spreads we were seeing in some of these things?
Oh yeah. It's risk off, and all the firms are they had already doubled the margins on Monday. Remember, I sent you the email how they were doubling margins. That was a heads up that the exchanges knew something could happen.
Well, we had some people email me last night because they knew I was sending charts out, with some of these moves, and they were saying we can't even get into our trading accounts. And my guess is, I said the firms just probably, wouldn't open them just to protect them from getting hurt.
Right. They
Did you notice any of that? Absolutely.
I think they tampered down and weren't necessarily answering their phones, and because the volatility was too great, the spreads were too wide, and their basic risk management people don't come in until 7:30 or 8 in the morning. So they didn't want anything too crazy to happen.
Okay, how will this affect the grain markets, Rich? Any feeling on that? Because we're at a 78% retracement now in corn here at 384, and we're right at a fib number in the November beans too at 1079. What do you think? Are these going to hold, or is this too crazy to trade today? Should wait till Monday?
Well, I'm more inclined to only trade when I can manage my risk, and when you've got crazy times and you can't manage your risk. I tend to, not be in there and be a cowboy. If you can manage your risk, then you can manage your profits. But when, this is a risk-off time. The grain markets are all about weather. The weather is, turned over the last weekend to cooler and wetter. Now, today it's staying cool, and it's a little drier, but not enough. We got a June 30th report. Could be the next big surprise in the grain. So they'll overdo it. They'll give us a big opportunity. But when you can't really manage your risk over the weekends, this is all about the reason you and I have stayed in this business for so long is, we've been able to manage our risk and survive some of the calamities that have occurred over the years. And one of the ways you do it is when things get a little crazy and you can't manage it over a weekend when the markets are closed. I tend to trade less, and
you can easily trade less. Yeah, and you can make. I mean, we have a 20 or 18-point move in the British pound, which is about a 2-year move in a matter of 7 or 8 hours. I mean, that's volatility like we don't see very often. But this is the start of something big, Rich. Usually, when you have an outlier event like this, you had the Nikkei was down. 9%, the biggest day down in 16 years in the Nikkei. So some people are a little nervous, I think.
You're right. So what happened, if you remember back to the 08 thing, which was a financial settlement deal, and this is not like that at all, but it took the people a few days to kind of figure out what happened, and then the trend really started to continue. So we have an emotional reaction. There'll be retracements. You take advantage of those retracements, and then the trend will likely continue. I mean, it'll be great fun trading during the day, but I don't know about staying over the weekend. And it's just going to be a lot thinner because those that haven't raised margins will, and that's true whether it be cattle or stock indexes. It's just. And we have cattle on feed report, we have pig crop reports, and then the June 30th is the big grain report. So we have all these reports coming in, and it's going to make a huge difference.
I noticed the cattle. We got down to the August cattle made a big ABCD pattern down there at the 108 level and has rallied quite a bit. Are you still friendly to cattle from this level,
Well,
Rich?
the last time I was on, I told you if we could close above 119, I'd be friendly for it to go for the futures to meet the cash. And we traded above 119 multiple days, but we could just never close there. If the professionals aren't willing to keep their money on the table, then I'm not willing to do it either. I think the 108 level has value and will hold. We'll probably retest it again. And on that retest, I think it'll be interesting. But there's an old saying that gentlemen don't trade cattle in the summer.
There's some other sayings that we can't repeat on the air too, but I remember some of them. Rich,
Yeah.
As far as these currency moves that we have, how much of an effect will they have on the ability of people to to buy our grains cheap and stuff? Because with the dollar being this strong, it's going to make our grain more expensive, isn't it?
Absolutely. And the grain markets, had enjoyed the risk on and the weakness in the dollar, and now the risk is off and the dollar's stronger, and so that's going to be a drag on the markets. But the number one thing is still the weather. The next weather report that shows us a little hot and dry, the thing that'll react most will be the soybeans, and the June 30th report could show, well, maybe they didn't increase acres as much as they thought. Maybe the stocks are less than they thought. I mean, we're going to see some more surprises. Option expiration is today. Isn't it funny how they're able to take these markets down to frustrate the most people on option expiration day? I swear, if you only traded the 2 weeks prior to an option expiration, although nowadays in some of these markets they have weekly option expirations, but that it's just amazing to me how they're able to do that.
Rich, have you done anything with the NADEX program?
No. I know Tom O'Brien is a big proponent of that, but I figure a guy can only do so many things, and so I try and stay focused on 3 or 4 markets, and there's so much opportunity in any one market. You don't need to be a master of them all. If you're a master of them all, you're a master of none. You just have to stay focused.
That's true. Rich,
that's my opinion.
I agree with you 100%. We've got so many things going on. Most I can look at is about 8 things, and then someone will ask me a question about something, and I'll take a look at it. But, this is a day trader's paradise looking at the swings that we're having. I mentioned to the folks that even though we had a $110 move up in gold, we've had a $120 move in gold since that time.
I know.
So we'll stay with us. We'll be right back.
I'll be here.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back with Rich Anderson of Anderson Capital Management. Rich, we've got a question from one of our folks in the Tiger Den. Why is August cattle so much weaker than the cash market? What's happening there?
Well, the demand after the 4th of July, falls off until you get the beef buying for the back to school program, which is generally starting in the second and third week of August. And so, seasonally, the demand is always poor at this time. Now, this year could be a surprise because with the price of beef having come down so much, particularly in relationship to pork, et cetera, I'm looking for the retail stores to special the beef. And that could make a big difference. But that's what the saying, the gentlemen don't trade cattle in the summer, because the demand just isn't there like it is at other times. So we have a long week next week to buy for a short week for the 4th of July, and then after that, unless the retail stores start to special steaks, et cetera, there's the big demand. Surprises just aren't going to be there. It's this back to schools. Government's the biggest user, and McDonald's are the biggest users of beef.
Mm-hmm. Okay, we had one other question regarding the soybean complex. We had a $3 a bushel rally off the bottom. Has anything changed fundamentally that would think this was a major top in the soybeans?
No, it's all about the weather. The weather forecasts, going into last Friday when we closed strong, looked like you had a lot of heat and dry. Over the weekend, it changed to more moisture and much cooler temperatures. And this morning's 6 to 10 day and 11 to 15 day continued with that cool. And so that's what's going on. But the June 30th report could throw you a curveball like you couldn't believe. And so, you don't want to get too bared up down here necessarily, because these reports can cause wild swings, not unlike the surprise election that we had.
Now, that was certainly wild swings. We haven't seen anything like that in a while. I mean, we've seen it before in our lifetimes, of course, but even then, when you watch it, it's, we saw this stuff in 2008. People don't remember it, of course, but we were seeing swings. The Dow was down 760 points at one time, last night. And, we've had a heck of a good rally off of that, but that would have been, the old record was down 777. That was right before the too big to fail thing occurred. So we're seeing swings that volatility that's just fabulous for options. I mean, it's got to be great for option premium, isn't it, Rich?
Oh, absolutely. The volatility's exploded through the roof. But, keep in mind all the July grain options expire today, so that they just disappear. It's like they take the eraser and wipe them off the chalkboard. And oftentimes, once they wipe things off the chalkboard, then they find a reason to resume trend. But the bottom line is the UK is too important to EU and the rest of the world. They'll have some kind of an association agreement. What it will look like, we have no idea, because we don't know who will be the person at the UK in charge of negotiating that, because with Cameron stepping down, they'll have elections in October. So it's going to leave uncertainty for the next 3-4 months, which will uncertainty increases volatility, and of course exchanges will increase margins, and you want to control your risk and use stops, because it's likely to stay wild and be a very interesting summer.
Have you had any personally? Have you had any wild stories from last night that were interesting, or
Not that you can really talk about in public.
well, the people that we were dealing with, most of them were on the right side of the market, but I'm sure there were some that weren't.
Oh yeah, but think about this. If you were a firm, you would be petrified to have people trading, and your main risk management team isn't in, and so they just turn the dial on the computers to slow. Yeah, this is the way I would envision it. They turn the dials on the computers, slow everything up, and they make sure that you've got plenty of equity in your account for the order to go through, and that, we're only talking nanoseconds, but that's what occurs, because the spreads are so wide between the bids and asks, and the opportunity to get taken advantage of by the markets, and the latency of your systems is just increased manyfold.
People don't understand that most of the time that the firms are doing this, they're doing this to protect the folks, not just being in a situation where there is they're trying to keep them from making money. That's not the case.
Oh no, because you've been on the other side of the coin where a firm went down and your money wasn't protected. Trust me, you want your money protected by the firms. The firms are acting in your best interest. There's no question about that.
Yeah, because if you go out of business, they go out of business, and that's not a good thing to have happen for sure.
Absolutely.
Well, listen, when is the grain report? On the 30th?
On the 30th, June 30th. Okay. It's a beautiful thing. It happens during the middle of the day, 12 o'clock Eastern time, 11 o'clock Central.
Yeah, I remember we used to have to wait overnight for it, but not anymore. They make it easy for the volatility to take a look at it. If you had to flip a coin, would you go long into the report from these numbers, or would you just wait until the report was out and bid up for it?
Well, what I'll be looking to do is maybe, because I try and, fade extremes, look at some kind of probably call spreads, because volatility jacks so much. As soon as the report's out, volatility immediately will go down 2 to 3% over the next day. Mm-hmm. So I'm going to be looking at some kind of an opportunity like that, but I'll mostly be watching the weather for the clues.
You'll be doing, if you do anything, you probably do premium selling. Is that what you'll be doing?
No, not in this case. I'll be looking at buying some calls that as an example, if we were to stay down here, I'd be looking at buying some calls that if there's a surprise, they'll react rather quickly, and then I'll look to sell premium to pay for those calls on that reaction.
Okay, that looks
rather
good.
Than having spreads on, because if you have spreads on, it's more about time than the price movement, and so you don't get much bang for your buck. So you leg into the spreads. That's my opinion.
We had one other question here. Your opinion on gold. What do you think here? Up $110 overnight. We're down, up about 60 right now. What's your feeling?
Well, if you look, the rather than the odds of the Fed doing a raise, the odds are now of the Fed doing a interest rate cut. If you look at the financial markets, right? Yeah. So as long as and the other day in her testimony, Chairman Yellen said we are going to continue to reinvest our our balance sheet. You know, previously people had anticipated that maybe as the bonds matured, they would let them roll off and thus reduce their balance sheet over time. By making that statement, I think, you know, that was a huge policy statement. So
Yeah.
money's going to be there, and so gold, it'll have a bid under the market. Any dips will be a buy.
Listen, thanks. Hey, thanks for joining us, buddy. We appreciate it. Rich Anderson from Anderson Capital Management, folks.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we start this rather quiet day here on Friday. Just be really careful. I would, unless you have a huge profits in something, I certainly wouldn't hold any positions over the weekend unless you're a professional trader. However, given the fact that we've had the news out, chances are there has to be something else out there that would cause the things to go a little crazy. So just remember that any market that can give you 700 points can take 700 points away from you. So keep that in mind. I would like to make a small comment here is that, we had all this bad news about the markets, and we had bonds of flight to quality like we haven't seen since Hitler took office. And yet we are, making higher highs on the day during TBT after it opened lower, and it could not even make new lows on the move. And that's a double weighted short T bond. So keep an eye on these bonds. I think that's where the real play is going to be. Also watch the S&P up here around this 2055 to 2060 area. That's a nice ABCD pattern from the move that we had last night. And remember, we were down 100 and some points at one time. We hit 2120. We went all the way down to 1999. So that's 121 points. And now we're rallying back some on this. So we'll see what happens. If this market takes it all back today, in other words, we close up on the day, you better go long stocks because they ain't going down. This is our worst day we had since August the 25th. And if the market, bottoms today, and this is a major bottom, then look out. Remember, we stopped exactly at the 382 retracement on the E-mini. Even though we were down limit for a couple of minutes, that 1099 was a perfect 382 retracement, on the whole move. So that in itself, ought to give you some attention. I'll put that in here so you folks can see it again, because this thing is you guys are making fun of me because I'm slurring my speech, folks. I haven't been to sleep, so I'm going to sleep soon. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.